Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So yeah, Bitcoin on the 4-hour, we're basically trading around this mid level of this next range that we're in, printing a pretty obvious symmetrical triangle here. We don't normally draw these in, but just for the sake of it, we'll draw this one in because it's looking pretty obvious. So we are obviously awaiting for a break. This is a bull flag, obviously off the back of moves up. In the middle of basically what is a bull flag confirmation to the upside of our previous leg up. So yeah, you would give this every opportunity of breaking to the upside, and then testing into our next major level of resistance, this $46,000 to $47,000 level. If we manage to break up there, we could get a nice bit of acceleration in towards some of the next levels within what would be our next sideways range. We'll just extend some of these across. Now they are well, hopefully going to become more relevant. We'll extend this one along as well. That one's not too important. Yeah, we'll extend this one along too. So yeah, we will have these levels to contend with mid-range, but then ultimately, if we do break above here, then yeah, we should hope obviously for sideways trading within this level, maintaining obviously above this old resistance as new support. So we do obviously know that we are getting obviously getting dragged up by the fact that stock markets are not collapsing and starting to look better. So they are at important levels. If we whiz on over there, you can see we are back at the underside of this resistance, testing it again. We had quite a big continuous move up. A decent sized pullback into support, flirted with that support a bit, and now are back up our resistance. So we have got every opportunity to break above here, break above this level, and then we are literally back into what is where all this price action was before, near the highs, obviously minus a few forays above and below. But yeah, so basically to get back into here would be extremely bullish off the back of where we've been and the fear in the market. And there is a pretty obvious shift in the market, certainly from equity market participants, that the Fed is not going to basically be as hawkish as they have been claiming. Obviously, bond markets aren't necessarily pricing that in so much. They are still thinking the Fed's going to have to act, but equity market participants at least are bidding these markets up, thinking that everything's gonna be not as bad as what has been priced in, which is my view as well. So I guess I have to get put in the dumb equity market category rather than the super smart bond market category. But I've seen the bond market get so much stuff wrong so many times. Yeah, so there you go. The 10-year, as we can see, still under this this horizontal level here, and notably under 2%. If we get above here and above 2%, it is going to cause a lot of problems. It is going to basically cause the Fed to have to start doing something. Who knows what that something will be, and that will potentially whack the dollar and also then obviously pin this down. So if we do look at the dollar, dollar still nicely under this resistance. So well, you can see it is tightening up here. Either is gonna bear flag this out and continue down from this move down, or we are going to squeeze back above this resistance, and then probably just maintain sideways within this level. So we'll have to see what happens there. US oil, US oil, the ticker on TradingView. But yeah, oil, as you can see, still hovering around those highs. So not too much to see there. Nascoin, as you can see, it has got back into back above this resistance here. This is not the cash market; it's not trading at the moment. But as you can see, under this this kind of trend line, we've got to draw it in. So if it can get above this, hold above here, and then make moves towards this final level of resistance up here. Well, final level we've got drawn on. There are obviously clearly levels up here, but this level, then this will look very bullish again, targeting new all-time highs. And I think we are at a post Omicron bounce in markets. There are obviously concerning signs in, well, GDP numbers that on the face of it look good, that are massively influenced by building inventories, which they are going to clearly weigh on GDP if obviously consumer spending struggles to buy those inventories, basically. Which with higher energy prices, higher prices at the pumps, just general higher prices of things, just wages not keeping up with the actual inflation, the consumer spending is going to come under pressure, and then that is going to result in those inventories not being bought down and then not being replenished, and then affecting the GDP, and then a slowdown. But these are lagging. These will be slow. These will take a good few months to play out, which is why I think we are in, like I said, a post Omicron sweet spot, where we can get a nice rally, potentially even to new all-time highs in stocks before well, then we potentially get we have to then talk about a recession next year, maybe even later this year. But we have to basically talk about we have to face some facts. Basically, the economy is going to have to. So the Ethereum Satoshi pairing, not doing a lot here. It could very easily resume this bearish trend from where we're at now, or it could turn back up and take out this horizontal and break up. It's difficult to decide where this chart's going now. My obviously optimistic bullish aspect, bullish bias would be to the upside. I mean, low, higher, low, higher, low. High, higher, high, etc. But we've got to basically get above this resistance for us to then probably go on a run. If not, we could actually turn down from here, extend this support along, and then we'd have to get supported here. If not, we could be breaking this higher low pattern, and that would not be very good. So potential descending broadening wedge, which is a bullish pattern. All I would really say is that we can probably draw in a trend line. Well, we can't really. We can just, it's not a very nice trend line. We'd have to draw it not straight. But take out, well, it's as simple as that. We'll take out this resistance, and then we will be looking good. If we don't, then and if we continue to move down from here, it's not looking too good. Ethereum at USD pairing, obviously getting dragged by Bitcoin, but if it does get above 3,500, then this will potentially look pretty good. Then this will potentially look good for more upside in the dollar value. It's just a case of obviously which would go up quicker, Bitcoin or Ethereum, and then obviously that would be reflected in the Ethereum Bitcoin ratio. Bitcoin dominance, not looked at that for a bit. Not looked at that. Kind of getting squeezed under this trend line, kind of getting held above, well, between this downward sloping trend line and this support zone. Awaiting a move. If we break above here, it could accelerate pretty quickly. You could see it's looking like a nice bull flag, but we are obviously in the context of a larger time frame move down and a potential descending triangle. So I mean, we've got to break through this support first. If not, then I mean, we could see a pretty aggressive move to the upside here, just going on the chart. So let's have a look at those stochastics. 4 hour has had an inverted commas bullish reset, so this could now actually bust us to the upside out of this symmetrical triangle that we're in, this pennant. 10 hour, let's wait for it to load up. I mean, 10 hour had come down, but looking to actually lose that downward momentum, so it could help us out. 12 hour though, firmly pointing down. Daily, freshly turned down. But then by daily, very good here. 3 day, very good looking here. 5 day, onwards and upwards, and then 5 day, then weekly, turned up, but obviously clearly waiting for some acceleration to the upside. But there are basically the green shoots of recovery, even if just on this this larger time frame, we just kind of do find ourselves a nice, just a lower high relative to these highs, and we kind of just have basically what would be more distribution before we do come down if we're not to make new all-time highs. But you kind of expect in this zone to be the critical point. We're not far away from, anywhere between say 47 and 58. So that $10,000 range is going to be the difficult range. There will be a lot of volatility there, a lot of opposing views, it will be a great place to sell, and it'll be a great place to to hold. Yeah, I mean, we'll have to see what is going on in the wider market. Also, it just depends when we get there. We get up there pretty soon. Like I said, we potentially got at least like a couple of weeks to a couple of months of a sweet spot in the economic data before we are almost certainly going to hit into harder times. Those harder times, though, we have to then see how the Fed and how it reacts, how the Treasury, how the government reacts, and what they decide to do. But nonetheless, there will potentially have to be a move down before there then is like a stimulus or whatever induced move to the upside. So obviously we need to manage that. But yeah, that is probably a couple of careers away at the end of this year. So nothing really to really try and manage at the moment. Let's just make hay whilst the sun shines, and then hope we continue onwards and upwards here. So yeah, thanks for listening, guys. Remember, this is not a financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.